Mortgage insurance today, Upfront mortgage insurance. Let's explain it. I think the big misunderstanding is when loan applications get kicked out, you see two different loan amounts. If you as a consumer actually read your paperwork that the lender gives you, which I think you really should, that's probably the smartest thing to do, is read the papers and make sure you know what you're signing, considering it's 30 years of your life. But another soapbox moment. Anyways, let's explain this. $350,000 purchase price. Let's walk through why you see two different loan amounts. And if you're doing an FHA loan or going to be doing an FHA loan, look for two different loan amounts. Here's your explanation why. So my first loan amount is going to be 96.5% of that number. That's the loan I can give you that's actually going to go towards the money we owe the seller. That number in this scenario, let me help you do the basic math, is $337,750. Okay, so of my $350 that I owe the seller, I'm going to give you a loan of $337,750. Great, basic math, right? 96.5% of $350,000. Here's where it gets a little bit interesting. FHA charges a 1.75% fee to insure the loan. So they say, hey, I'm going to insure this loan. I'm going to give you this really awesome interest rate, but you're going to pay me this much money for this insurance. And that on this $350,000, 1.75% of $350,000 is $6,125. Okay. I'm going to take this number and I'm going to add it to this number, and that becomes the second loan amount. That number essentially is 98.25%, because I'll explain that in just a minute, which becomes $343,875. So this is loan amount number one you see. This is loan amount number two you see. They're both on the loan application. 98.25 is what we're technically going to be leaning against the property, because it's 96.5% plus 1.75%. That's where we get our 98.25. So you see two different loan amounts. This is what I owe. The nice thing about this is we have 1.75 in a fee that we owe FHA for the insurance of this loan. If we didn't have the ability to finance it in, you would be trying to find another $6,000 to bring to closing for the ability to close your FHA loan. Luckily, they allow us to finance that in, so that's really nice. But it is a misunderstood thing for a borrower, because you see this loan amount everywhere. This loan amount hides just a little bit in the paperwork. Ask questions, double check things, make sure you understand, but that is why we have upfront mortgage insurance and it's financed in.
Thanks so much for listening. I really appreciate it. So stay tuned. We are going to learn some more next time.